I put together some tables that show credit amounts. The numbers in my table come from the IRS table. So the IRS has this table, it's actually 9 pages long, that for various income levels shows the amount of the earned income tax credit. You'll find that table in the instructions for Form 1040, which is the U.S. individual income tax return. It would not be possible in a video to go through all 9 pages of that table. It's literally thousands upon thousands of numbers. So what I've done is prepared shorter tables using those numbers from the IRS table that will give you at least an approximation of your earned income credit amount. And all you have to do when I show you the tables is find a number that's as close as possible to your earned income, and then you'll be able to see the amount of your earned income credit. So it's really as simple as that. Before I jump into the tables, and I know everyone wants to see those tables as soon as possible, there are some key things I need to point out to make sure that you look up your number correctly in the table. The first one is that we have a very special rule for 2020. It's applicable only to 2020. This is not the normal rule. It's a special rule enacted by Congress because they realized that due to the coronavirus, many people have had a drop in earned income between 2019 and 2020. Maybe they got laid off from their job, maybe their hours were reduced, so their income has gone down in 2020. So they created this special rule that says if your 2020 earned income is lower than your 2019 earned income, then you can elect to use your 2019 earned income, in other words, the higher earned income, to determine the amount of your 2020 earned income credit. And they created that rule because they didn't want the drop in earned income between 2019 and 2020 to result in people getting a lower earned income credit for 2020. So it's a very nice rule. But a little caution here, for people at lower income levels, making that election to use your 2019 earned income helps. It will get you a larger credit for 2020. But for people at higher income levels, that election actually will hurt. It will result in a lower earned income credit for 2020. So what you have to do in the tables, both in my tables I'm about to show you, as well as the IRS's much longer tables, you need to look at both your 2020 earned income and see what the earned income credit is in the table, and then your 2019 earned income and see what your earned income credit is in the table, and then just choose the higher of the two amounts. It's really as simple as that. But that's a very important election you have, very special rule for 2020. So keep that in mind as we look at the tables. Next, I need to tell you that there are going to be separate tables in my tables depending on your tax return filing status. So everyone, when they file a return, has to check a box as to their filing status. And for the earned income credit, we divide those statuses into 2 categories. First, married filing jointly. If you're married filing separately, you can't claim the earned income credit. So that's the first category. The second category, we lump together single head of household, qualifying widow or widower. And the IRS makes that same distinction in their tables. One more thing I need to tell you, I promise this is the last thing before we look at the tables, is that the rules require you to use what's called your adjusted gross income to look up your credit in the table if your adjusted gross income is higher than your earned income. So typically you use your earned income to look up the credit amount in the table. Now, adjusted gross income is earned income plus certain taxable amounts like investment income, and then you subtract certain deductible amounts like self-employment taxes. Now, it gets complicated because this rule that you may have to use your adjusted gross income to look up the amount of your credit in the table applies at only higher levels of income, and the level of income at which it applies depends on your filing status and the number of qualifying children. And it's just way too complicated for me to get into in this video. I do get into it in depth in my thorough discussion video. So if you want more information, you can go there. I can just tell you though that your earned income and adjusted gross income may be exactly the same, or maybe there's not that much difference in the two amounts. So you're probably, generally, most of you are going to be okay just to look up your earned income in the tables that I'm about to show you. So without further ado, let's get into the tables. We're going to start with married filing jointly. So the way you use the table is really pretty simple. Down the left, there are varying degrees of earned income. So find a number that's as close to your earned income as you can get. And this would be, of course, the combined earned income of both spouses. And then go across, and as you can see, the amount of your credit depends on how many qualifying children you have. So it's not an easy formula. That's why we have to have these tables. That's why the IRS has a table. So let's take, for example, a married couple with combined earned income of $20,000, and let's say they have 3 or more qualifying children. Once you get to 3 qualifying children, it doesn't matter how many more you have for purposes of the earned income credit. So in that example, $20,000 of income, 3 or more qualifying children, their credit is $6,660. I hope some of you are looking up numbers here and getting pretty excited about how much the earned income credit can be. Some of you may be a little disappointed, especially if you have no qualifying children. The credit's pretty low. It really is much, much higher for people with qualifying children. Now, if you're not seeing a number here that applies to you because your earned income is higher, no fears. We now go to the next table where I increase the amounts, and we're still on married filing jointly. Now here you see some numbers that are highlighted. Let me explain what those mean. At those specific numbers, you make too much money and you cannot claim the earned income credit. When I say you make too much money, I don't mean that you make too much money. I don't mean that literally. I mean you make too much money for purposes of the earned income credit, and it's high enough that it essentially disqualifies you from getting any earned income credit. So an example of that would be that if you're married filing jointly and you have no qualifying children, if you make $21,710 or more, then you're not going to get an earned income credit. That's why for any income levels above that, as you see in the table, the earned income credit is 0. And it works the same way whether you have 1 qualifying child, 2, or 3 or more. It's just that the more qualifying children you have, the higher the income you can have and still be able to claim the credit. So as another example, let's say you have 2 qualifying children. As you see, if your income is $53,330 or more, then you make too much money for the earned income credit and you don't get any credit. So those are the tables for married filing jointly. Now let's move to single. And these tables apply if you're filing a single head of household or qualifying widow or widower. They're all lumped together. Doesn't matter which of those filing statuses you have. So let's do an example. Let's say that your income is $10,000 and you have 1 qualifying child. Your earned income credit for 2020 will be $3,409. And you're going to see highlighted numbers again, indicating, for example, that if you're single, you have no qualifying children, and your income is $15,820 or higher, then you will not get an earned income credit. You make too much money for purposes of the earned income credit. Now moving on to higher levels of income for single individuals, you can see the numbers here. You can find a number that's hopefully close to your income, and then based on your number of qualifying children, find the amount of your earned income credit. Now the IRS tables have many, many, many levels of income listed, actually in $50 increments. So that will show you exactly what your earned income credit will be. But these tables hopefully give you a pretty good idea. And here again, I've highlighted the income levels at which you make too much money for the earned income credit and you don't get a credit.